Hi everyone, this is Shreen Purewal, and today's hot topic for real estate is these new changes to the capital gains tax that are coming into effect very soon. How will it affect you as an investor, and what should you do? All right, and I'll talk more about what is this hike all about, because a lot of people are not clear how it all works. Okay, so there is some good news, and if you think of it overall, it's not. I mean, it is a significant increase if it's large sums of money, but we'll go through it. Stay tuned, okay? Listen on. All right. So, in our budget recently, we were told that there's going to be a higher two-thirds of capital gains will be taxed. Okay. Now, first of all, what are capital gains? All right. So, a capital gain is the profit realized from selling an asset from more than what the purchase price was. So, suppose you bought a place for 750 and you sold it for 850. What is your gain? It's 100K. So, that is considered to be your capital gain. Okay. Now, this new tax, does the tax on capital gains include the family home? No. Your primary residence does not need to pay capital gains on it. So let's say you bought your home for 100,000 and it's worth 1 million, that 900,000 that you made in gain is tax free. Okay? So your primary residence, don't worry about it, you're okay. Now, be careful, because some parents assume, okay, their kids live in the home, they can, and they inherit the home, and they can assume that capital gain for free by them assuming that home in their inheritance. You got to get an account to advise you on that, because a lot of people end up having to pay a gain on their parents' estate coming to them. So find out about estate planning and the gains and how they're affected there from parent to child. That's really important. Okay. Moving on, how are the capital gains tax and what's changing? So, I'm not going to read off the slide. You are welcome to read off the slide, but basically, if your gain is under 250,000, okay, 50% of that, okay, 50%. So let's say you make 250,000 on your home, okay? From the day you purchase it till now, it's gone up to 50% of that goes towards your capital gains. With the new rules, let's say your home went up more than 250,000, okay? Anything above the 250 now becomes two-thirds of it becomes capital gains versus 50%, okay? So suppose right now you have a condo, it went up to 50% of that you can put into your accounts towards your income. But if it goes up, let's say 300,000, now two-thirds of that goes towards your income versus 50. So that's the shift. Now, on large amounts, that's a significant amount of money. All right. So let's deep dive into these capital gains and what else. What does this change mean for property sales? Principal residence sales remain exempt. Lifetime capital gains tax exemption on small business shares, farming, and fishery property retained. Proposed increase of lifetime exemption to 1.25 million with indexing to inflation. Tax implications for gifted or inherited properties. Higher capital gains tax may apply upon sale depending on profit size. Exemption potential if property becomes primary residence. So you got to look into where are there exemptions to this rule. But for them, and if you're a company, so let's say you're buying the property to put into a holdco, there is not even a 250,000 limit. It's right off the bat two-thirds taxable. So be careful when you decide now to put your property into holdcos. The capital gains will affect it even more. Okay. Now, they're saying it doesn't affect a lot of people. 28.5 million Canadians projected to have no capital gains income. 3 million Canadians expected to earn capital gains below 250 annual threshold. Only 0.13% of Canadians, so less than 1%, they're saying, with an average income of approximately 1.4 million per year, anticipate to pay more in personal income tax on capital gains due to the change. Okay, so they're saying only a minimal amount of people will be affected by this. I think it's going to be more, to be quite honest with you. But, you know, it's just making it harder and harder for people to make Canada. What the US can get away with and what we can get away with is so much more different. So at the end of the day, if you ask me, guys, what do I suggest? Also, be mindful. So, for example, I bought a pre sale condo. We need to wait 2 years for the anti flipping and then anti flipping rules to not apply. And then we got to wait for the capital gains rule to be under 250. So it's only 50%. So on my pre-sale, I'm like, okay, I have to wait my 2 years anyways, but luckily my capital gain is less than 250. So I should be fine on it being under 50, being within the 50% instead of the 2/3. Now, the question for you is, should you sell or should you buy? Let's drop some questions below and let's see what we should do, and what the audience says and what I recommend. It's all case by case scenario basis, but most part accountants are saying it's a minimal amount. It's not that much. Bumps you from 30 to 32% or something like that. I say, you know what, let's review it on a case by case basis. So guys, like and follow this channel if I can do more videos or presentations to help you guys with the changes, continuous changes in the real estate laws of BC. Cheers, guys, and take care. Bye now.